Hey everyone, Ben here. With the stock market at all-time highs, I thought now would be a great time to check out my stock market watch list. So these are stocks that I'm watching. It's basically like my shopping list for new stocks to buy once the stock market crashes. So I'm going to reveal my top 3 stocks to buy during the next stock market crash or correction. I think a correction is extremely likely. Stock market crash, maybe not so much. But before we dive right in, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. If you do find any value in this video at all, feel free to give it an early thumbs up. That helps out tremendously with the YouTube AI. And if you do want to know exactly which stocks I'm buying, which stocks I'm selling, and get access to my entire investment portfolio, and you can even talk to me directly about your own investing and investing decisions, and join a thriving community of fantastic people in the VIP group, then check out that first link in the description below to find out more. But with that being said, let's dive in. So we're going to do a countdown, guys. Kicking things off at stock number 3 is Unity, ticker symbol U. So Unity is a company which creates a software platform used in game development. Now I'm extremely bullish on the gaming industry and it's grown massively, especially during the lockdown period. Here's a few of their popular games that they've created. It's basically a platform for game developers to use, an extremely popular platform. It can even be used for augmented reality and virtual reality. I actually did my dissertation at university using Unity and I created an augmented reality system. Now this was many years ago before Snapchat filters and augmented reality was actually popular. So I like to think I was at the cutting edge. This was a recent IPO. It IPO'd quite a high price, around $72 per share, $34 billion market cap. So these are quite established mid-cap companies I'm going to be talking about in this video, but still with major growth potential. Now the stock ran up from the IPO. It ran up by 152%, which was extremely high. And then there's been quite a large pullback right now. So the stock's pulled back nearly 27%. So 30% down. This could be a potential buying opportunity. Let's just dive straight into a couple of fundamentals and then we're going to get into the technicals for Unity. So I'm not going to dive deep into the fundamentals. We're going to look at a few metrics. First thing we're going to look at is the growth rate. So we can see compared to the last period, the company had around 39% growth. Now, generally, I say a growth stock as one which has grown between 15 and 20% per year. So 39% is a fantastic growth rate. Balance sheet is strong with a current ratio of 4.13. So current ratio is basically your short-term assets of the company compared to the short-term debts or liabilities. So basically, imagine the cash on the balance sheet. How much cash is on the balance sheet that can pay off the company's short-term debts? That's those due within the next 12 months. Now, generally, I'll look for a current ratio at least 1.5 to 2. This company, Unity, has a current ratio of 4.13, which is fantastic. It means the company's balance sheet is a fortress. So revenues forecast to increase, as is net income, as is earnings per share. Great thing to see. The company is still unprofitable as it's a growth company. It's reinvesting for growth. However, the price of sales is also quite high. So even despite this pullback, the price of sales for the company is 44.64. So you're still paying 44 times the company's sales, but you could justify it given the stock's pullback. So that's down to you. It's not down to me. This is not financial advice. Diving into the technicals for this company. So I've got the technical chart up here for Unity. I know a lot of you guys like the technicals. Comment below if you want more technical analysis, buy points, etc. For those who don't know, quick overview. I've got a candlestick chart here. It's basically each candlestick represents a buy or a sell during that period of time. So this is a daily chart. Each candlestick is over a period of 1 day of trading. Now this blue line here is the moving average. And generally what you want to be looking for is the stock is below the moving average. So then it wouldn't be expected to pull back anymore. And thus that could be potential opportunity. So at the moment you can see the stock is below the moving average. I've also put this what's called a Fibonacci retracement up. So don't let those words confuse you guys. It just allows us to identify support and resistances where we can identify buy points. So potential buy point here is $120 per share. So you might want to write these down, guys, or just pause the video, write it down, and then restart the video. Buy point $214 per share. I actually think this buy point 1 right now, $120 per share, is actually quite a strong buy point. So yeah, definitely potential opportunity there for Unity. The reason the stock plummeted by around minus 30% was because the company had not an exceptional quarter, and this stock is priced for perfection. So that's why we saw the stock dive. Okay, on to stock number 2 is Autodesk, ticker symbol ADSK. This company is a leader in software for the engineering and construction businesses. Now, I used to be an electrical design engineer, and I also used to design IT networks for companies, and we used to use Autodesk quite a lot for cable routing design, for construction design. Many mechanical engineers use this for 3D modeling design. Very popular platform, and also this company does have some stickiness and maybe a competitive advantage, because if a company has trained their employees to use a certain software and it's the standard in the industry, which I believe this software is, then they would be more reluctant to change to a different software. So that could be a competitive advantage for this company, and I do think it is. Okay, so quick dive into the share price. Autodesk has been on an absolute tear. It's got a $67 billion market cap, so you could call it a mid-cap company, but still it went from $200 per share at the start of 2020, and now it's up by 47%. It's around $305 per share. Now, I actually personally wasn't too bullish on Autodesk during this 2020 period, because I thought construction industry, things are going to slow down during 2020, and perhaps they did slow down, but the market is forward looking, and the market decided, well, it's going to go up anyway, and they decided to invest heavy. Even during the major decline in March, it only went down by 26%, 30%. Now, that's a sign of an exceptional company that doesn't dip too much during stock market crashes. So definitely one to watch, definitely one you could hold for the next 10 years if you get in at the right level. Sales growth only 13%, so not amazingly high. In the past, it's grown at around 17%, but still, most companies are growing at 5%, these large cap companies. So it's not too bad. The company's just started to become profitable in 2020. Perhaps that's why we saw an increase in share price. So profits have been compounding over time. This company seems to be focusing a lot more on profits now and free cash flow, which is great to see. Revenues forecast to increase, as is net income, as is earnings per share. Analyst consensus. We'll dive into the analyst consensus. Credit Suisse here, Morgan Stanley, Goldman Sachs, many other research companies. 4 hold, 9 buy, 6 a strong buy, 1 sell, 1 strong sell. So mostly buy for Autodesk. Current ratio 0.83, not very high. I'd like to see it at least 1.5, but the company is profitable, so I wouldn't worry too much in terms of the short-term debt. This is also a software company, which are my favorite type of companies because they can scale relatively easy and they tend to have high margins. Price to sales is 18, so you're paying 18 times the company's sales, which is a better valuation than Unity. I know they're a different industry, but still you could compare them both as software. So better valuation than Unity in terms of price to sales. P ratio, this company, you can use the P ratio, which is 60, well 59. So you're paying 59 times the company's profits. That is extremely high. The S&P 500 is a P ratio of 25, but these are growth companies and they're mid-cap and they're established and they have competitive advantage and moat. So some of these companies are worth paying up for, and I must admit that. Currently, you could potentially get a small stake. There's been a slight dip here. At 294, potentially get a small stake if you really want exposure to this stock. Buy point 2, which was this little decline here, was $275 per share. So that was buy point 2. Buy point 3, now this is a point where I would load up the truck. So this could be a stock market crash, major correction. That's when I would load up the truck on this stock because it's a relatively safe company. They have a lot of growth ahead. It's established. It's in an established market. Very interesting company. It's a software company. So around $230, I would load up the truck seriously on this company. Okay, finally, stock number 1 on my list is Chewy. So Chewy is a supplier of online pet food, pet accessories, and even pet dental care. An industry I'm extremely bullish on is the pet owners industry, especially the dog owning industry. Now, I have checked up statistics to back this up. I don't just come up with these industry tailwinds off the top of my head. But if you want to just ask a few friends, you'll find that a lot of people tend to have dogs these days also. So this company definitely benefits from that. So you can see their website here. You can buy literally everything for your dog online. So people used to go into normal brick and mortar pet retail stores, and you can still do that, but an online alternative can make it a lot easier for people if you can get things delivered without having to leave your home, which especially is beneficial during lockdown. And I think medication and the pharmacy side of this business are real tailwinds for pets. I don't know if you've ever owned a pet, but the price and the cost for actually giving medicine to your pet can be extremely high. So Chewy benefits from this. I believe Carl Icahn, a famous investor, or George Soros, one of the two, was definitely invested into Chewy. So ticker symbol CHWY. And as you can see here, the stock has been in an absolute tear. So from February, $29 per share, and it's now up by 300%. So congratulations to those who invested into Chewy. Exceptional company, exceptional growth, 300% returns on a relatively safe e-commerce company. Of course, it's benefited during the lockdown. E-commerce has been a major winner from this lockdown. So this company was founded back in 2011. Current CEO is Sumit Singh. So very interesting company. Couple of fundamentals for this company. This is what I like to see: growth and value. So current sales growth has been 44.9%. Sales growth over a compounded 3-year period has been 243%, so exceptional growth. This has been the fastest growing company on this list, but many could say this is due to the global issue and it's a slightly smaller company. Company is unprofitable at the moment because it's focusing on growth. Price to sales, that's what I like to see. So price to sales is just 7.58, so that's actually not too bad for the e-commerce industry despite this major run-up. But you might want to wait for a pullback, which is why I'm going to check out the buy points due to this major run-up. Now, I did actually purchase the stock, and I got it a while back. I'll show you where I purchased it. I did alert all the members in the VIP group when I was buying into this stock. I actually had my buy point. See, it might have been this point here, about $65. So it's potentially up a double on that. So 100% returns. And that was actually quite late. I was actually quite late getting into this stock. But yeah, congratulations to those in the VIP group who got my buy alert for this stock. So yeah, it's still up massively now. I've not added to my position yet as I'm waiting for a pullback. If it pulls back, it might not though. So buy point 1 is $85. This is where I'm looking at. At the moment, it's above the moving average. So it's a little bit overextended. So buy point 1, $85. Buy point 2, $65. This is a point where I would load up the truck on Chewy. So exceptional company. I've always wanted exposure to the pet and dog industry, and this seems to be one of the best companies in order to get exposure to that industry. So if you guys found some value in this video, feel free to give it a big thumbs up. Also comment your thoughts below. Which stocks are you looking at right now? If you haven't subscribed already, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do want to access exactly which stocks I'm buying, which stocks I'm selling, and not miss out on great opportunities like Chewy stock right here, then feel free to check out that first link in the description below for the VIP membership group. You also get to join an exceptional community of some of the finest people on the internet. So feel free to check out that first link in the description below. Some exceptional people in this group. We all share our different research about stocks, about companies, and it helps us to become better investors. And I hope you guys have an incredible day. I hope you're all doing well, and I'll see you all in my next video. Invest safe.